Stocks fell for a third straight day today, but a little different reasons today. Today we actually did get some really good economic data that unfortunately actually had a positive impact on yields and on the dollar. So we're going to break down, what happened in the markets, why, like what cracks are starting to show beneath the surface of this really strong bull market that we've had, even more so now than the last few times that we've had these near-term declines like we're having right now. So does that mean this near-term decline can turn into something more? So we'll break all that down in today's market outlook preview. Today is Thursday, September 25th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. Quickly as we get started, if you're watching on YouTube, you can come to marketscholars.com with this link right here. Will take you to this page. This is our blog post for today. You can see there's a lot of detail here about what happened today, what it means, what to watch next, how to take advantage of it, and some final thoughts here. You can see everything that happened in the markets today. This is all for free. So all you got to do is go to that link, marketscholars.com. It'll ask you to sign up for a free account. Basic account, and that gets you access, and you can see the videos also posted here as well. The markets continued their decline to the downside. You can see we had our 3-day move to the downside here, or a third day, of 3 days to the downside. It's kept the near-term line down. It's like, what was the reason for that? Well, today we actually got a kind of a trifecta of really good economic news. So you had GDP being revised higher to 3.8%. You had jobless claims coming in really, really nicely. And then you had durable goods rebounding in a big way. So economic surprise in terms of like how the indicators are doing relative to their estimates, taking a big jump up today, big move to the upside. As a result, the three-headed monster reared its ugly head again. So the one we talked about yesterday came again today. So it's really been impacting the market over the past 3 days. And you can see that that's having an impact on rate cut odds, which you can see for December now, the odds for a cut of 2 cuts by the end of the year are now down from, what was a week ago, 80% odds, so very high probability, now down to only 60%. Still a high probability, but we're getting to be pretty low to get the second cut, right? The first cut still 90 some odd percent. But to get that second cut by December is again, yesterday was at 75%. Now this line is moving up here to 40%. So only a 60% chance of cuts. If you look at the other thing too, the other cracks underneath the surface that I dive into the detail about that three-headed monster, why it matters, what the trend is for those 3 relationships. There's 3 really important intermarket relationships that are impacting risk appetite. So I go into a lot of detail in tonight's full market outlook video into those 3 relationships and where we expect those 3 to go. Obviously, that's going to impact risk appetite. But the other thing that's really impacting things is the breadth is really, really poor. So the number of stocks above their 50-day moving average, or excuse me, this is the McClellan oscillator. Excuse me, these are the advancers, net advancers, really coming down here. So actually, like a MACD of the net advancers. If I take a look at these other charts that show breadth, like for example, the number of stocks above the 50-day moving average dropping almost below 50%. So that's a big drop there. The number of new highs dropping like a rock down to 44. So breadth is really deteriorating, and that's one of the biggest signs of a change in investor sentiment. Speaking of the investor, the AAII survey actually went positive this past week. But you can tell this week, so when we get the results on next Thursday, this week, you can already see the change in sentiment is actually turning south based off of these breadth indicators and the rotation, the sector rotation that's building underneath the surface that I also break down in tonight's full market outlook video as well. All right, well, that does it for today. For our market outlook preview. Again, you can get the full version of the market outlook at marketscholars.com. That link I showed you before, it's actually down in the description. This link right here will take you to the page where you subscribe to our site for free. That will give you access to our daily blog post. So I post that blog every single day to give you an idea of what happened today, very detailed. a picture of what happened today, why it matters, what we can expect to see going forward. So check that out for free every day. Again, you get access at marketscholars.com to our full market outlook video, 30-minute video that this is a preview of. You can get to this link here. This will subscribe you to our foundation tier. That's our base level tier, just $29 a month. You get access to all of our daily market outlook videos, including the trade ideas that we do at the end of the day. You also get access to the Market Outlook Live, where we put those trades on in real time and then track those trades and manage those trades in real time. You also get access to our Market Outlook Live trade tracker, where we track the results of those trades, all for just $29 a month, or roughly less than $1.40 per video. So that's a really good value for, to get a good picture of what's going on in the markets and why it matters to you, as well as a way to apply what we're getting out of the markets right now to the current market setting in real time. Thank you for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on the video down below, share it with anybody else. Follow me on Twitter at DavidSettle42 for more content between the videos. Have a great rest of your Thursday night, everybody, and we'll see you all tomorrow.